Joining us now, first on CNBC, is Raymond James CEO Paul Shoukry. Paul, welcome back. It's good to see you.
Yeah, great to see you again.
I mean, clearly, you're seeing a good growth environment. Client assets are up. Is that driven by your ability to attract new advisors?
Yeah, absolutely. Our client assets are up 15% year over year, and our fee-based assets are up 20% year over year. And that has been driven by first retaining our existing advisors. Our retention, especially given the competitive environment, remains very strong. And then our recruiting. We had a record recruiting year last year. The pace this year for the first half of the fiscal year is actually exceeding the pace in the first half of last year. And that's recruiting experienced advisors, being a destination of choice, combining culture and capabilities that has really driven that pipeline across all of our affiliation options.
And what are you seeing right now from the customers, the wealth customers, as far as how they're navigating the volatility and the geopolitical risk?
Yeah, we had 3 client events just in the last quarter across the country, and I met with a lot of the advisors and clients, and the sentiment down a little bit quarter over quarter because of the geopolitical risk and some of the commodity volatility and increases in gas prices, but still high historically. Advisors have done a very good job keeping advisors invested in the markets. If nothing else, they've learned over the last 5 to 7 years that emotional knee-jerk reactions to headlines and social media posts usually end up being an overreaction and a bad decision. So the advisors are keeping their clients invested in the markets, consistent and aligned with the long-term financial priorities.
Not changing any big allocations or anything?
No, if you look at our allocations to equities and fixed income and the other products, it's been remarkably consistent. Actually, when there's dips, you'll see a lot of rebalancing and purchasing into the market when there's dips. So again, the value of a financial advisor is to keep their clients aligned with their long-term financial objectives.
Wondering how you think about the path to growth from here. I mean, I started covering securities brokerage industry more than 30 years ago, and every single moment from then to now, it seemed as if something was going to disrupt it. It was going to be discount brokerage. It was RIAs. Obviously, now there's talk of robo-advisors came along, and something is always there as a perceived threat to full-service wealth management. So yes, so AI was a little bit of a scare last year. How is that filtering into how you think about the market?
Yeah, well, certainly technology has changed our business a lot over your 30 years of covering the business. Certainly, advisors are expected to do more now, provide more holistic and bespoke financial advice, and AI actually helps that. But what's remained resilient and actually has strengthened in terms of importance is the human personal relationship that advisors have with their clients. Again, attending these client events, you see how deeply those personal relationships are. They're not just an advisor-client relationships. In most cases, they're good friends. And that has persisted and actually been strengthened. I would say in this world of AI and technology, what people need more than ever is a deeply personal relationship. And counterintuitively, what's harder to find now than ever is a deeply personal relationship. And so that's where Raymond James and our advisors are really focused.
But you did kind of proactively bring this up on the call as well, didn't you, in terms of AI and what it's doing?
Oh, absolutely. I mean,
I'm curious as to why, or what use cases sort of you're providing to your investor base to sort of show it's going to be a positive, not a negative.
No, absolutely. We spend over $1 billion a year in technology, and almost all of that is directed to the wealth business. The fastest growing component from a smaller base of our technology investment this upcoming year is AI. And so what we're focused on AI is stability of the platform, cybersecurity. That's made a lot of news in the last 2 to 3 weeks. We've been using that AI to help our cybersecurity detect and contain threats much faster. And we're going to have to continue to invest in those tools to be even faster because the cyber threats are becoming more dynamic and powerful. Using AI to provide more bespoke and tailored financial advice to a larger number of clients. Usually, providing more to a larger number of clients means less bespoke and less tailored advice. AI can help you provide more tailored advice to a larger number of clients.
What about like automatic cash sweep tools, right? That's an important revenue business.
Yeah, there's been a lot of news on that. I think that's more directed to the e-brokers and maybe the checking accounts at traditional banks. If you look at our industry, since rates started going up, client cash balances in the sweep program are down 40 to 50% across the industry. And that's because advisors have helped their clients reinvest that cash to higher yielding alternatives. So we have an open purchase money market fund platform where we allow all clients to buy institutional share classes. We have an enhanced savings program where clients can get up to $50 million of FDIC insurance at a high rate. So we have a lot of alternatives, and advisors have helped their clients get there. So I don't think AI for us changes that particular dynamic much.
We're running out of time, but capital markets we haven't hit, and it was up, I think, as much as 17% year over year. Do you expect there to be continued momentum in that part of the business?
We hope so. Our investment banking pipelines are strong. 65% of our business is driven by financial sponsors, both on the buy and or sell side. There's a lot of pent-up demand for both buyers and sellers. Buyers have dry powder. Sellers have investments that have, in a lot of cases, went past their original tenure.
Yeah, they're looking for exits.
Yeah, so we have a great and growing pipeline. We just need the market to support that and facilitate that.
All right, Paul, thank you for joining us with an update on the business, what you're seeing. We appreciate it. Paul Shoukry, the CEO of Raymond James Financial.